Yo, what's going on, guys? Welcome back to another video today on the channel. Today, I want to do something a little bit different. I want to get away from options and I want to focus on long-term investing. You guys have seen the market has been falling. You also have been seeing a lot of noise and a lot of panic going on both YouTube, on CNBC, and all across the internet. People talking about how this could get really bad, how you should sell shares, and overall, just instilling panic in investors. Now today, I want to talk about why I think you should ignore some of that noise. What you need to decide and what we're going to talk about in today's video is whether you are actually investing in the long term or are you just in a trading account? Are you focusing on your long term too much as a trading account, or are you actually investing for the long term? That is a question that you need to ask yourself. Now, what's the difference between those two? Number one, if you're investing in shares and you're saying to yourself that I'm investing for the long term, but if you're watching your portfolio on a daily basis, if you're looking at the unrealized losses and you're getting concerned because you see Apple is dropping, Microsoft is dropping, and you're starting to get a little worried about some of the unrealized losses, then that right there is the definition of trading. You are not investing for the long term. You are too worried about some of the positions that you have, and you are concerned, and you are not focusing on the long-term time horizon. Now, there's a few reasons why this might come into it. One, you don't believe in the company, or maybe you're putting too much money into these areas. Maybe you are investing money that you cannot afford to lose. You are either on margin, you're allocating too much money into the specific stock, and you're not comfortable. And that is what happens if you are in a trading account and if you are allocating or over leveraging yourself into shares or long-term investments. Now, if you are in that position, then this video may not apply to you, because in this video, we are going to talk about what actually long-term investing is, and what actually having a long-term time horizon is, and investing money that you can afford to lose and that you are comfortable with. Now, in my opinion, guys, I believe that you should always have a long-term portfolio, something that you invest for 30, 40 years down the road. Of course, depending on how old you are, but if you are in your late teens, 20s, and early 30s to maybe mid 30s, you honestly should have nothing to worry about as of right now. You should be focusing on your 50s, 60s, 70s, setting yourself up for 30, 40 years in the future, making sure that you have investments that you are potentially purchasing now. And right now is even better of an opportunity to be purchasing shares, in my opinion. Now, you might say, buying shares now, you're buying a falling knife. Why would you buy shares now? And this is where dollar cost averaging comes into play. If you guys are in your 20s, in your 30s, if you are actually investing for the long term, if you are actually not concerned about what happens in the next 6 months, next year, next 2 years, next 3 years, you should not be concerned about that if you are actually long-term investing. I see plenty of people online in my Discord community that are over-leveraged, that are focusing on too short-term of a time horizon, and they are getting concerned about some of the shares that they own. In my opinion, I'm not concerned one bit. I continue to buy this market every single week with an amount that I'm willing to lose because I have a true long-term time horizon. Now back onto the topic of dollar cost averaging. What is dollar cost averaging? Dollar cost averaging is when you enter the market on a consistent, timely basis, let's say every week, every 2 weeks, every month, with an amount that you are comfortable to invest. For me, I put $500 a week into the market. This is an amount that I am comfortable with. I am okay losing $500 if I do put it into the market and everything tanks. I'm not concerned. I am more focused on piling up shares of good companies. I would rather continue to buy those shares because, in my belief, with a long-term time horizon, I am focused on what is Apple, what is Microsoft, what is stocks like Google going to be at in 30, 40 years. I do not care where Apple is over the next year. Now, you probably heard me say an amount that you're willing to lose. And I think a lot of investors, a lot of traders lose sight of what that means. Weeks go on, days go on, months go on, and maybe you get into a situation where you start pushing your limits a little bit too far, right? You're starting to invest more money than you are actually comfortable with. And that is a recipe for disaster in a long-term portfolio. One, maybe you don't have any cash left. And two, you start seeing the unrealized losses coming in, and they are larger than you expected. Maybe your portfolio has gotten up to 50, 100,000, 200,000, and a red day with a $100,000 account may be $5,000, $6,000, $7,000. And if you focus on the percentage point in that situation, it's really not too bad. But you have gotten into a scenario where you are not comfortable seeing that amount. And what that means is that you are in a situation that you have over leveraged yourself and you are not comfortable with the situation that you are in the market. Now, this is something that I don't want to see anyone get themselves into, because you are going to make irrational decisions, you're going to make emotional decisions, and you are going to end up selling when you probably should not have. If you are truly investing an amount that you're willing to lose, then there is little to nothing that you have to worry about in this current market. Of course, we could drop another 10, 20, 30%. If that happens, of course, you are going to see more losses. But if you are focused on the long-term horizon, 15, 20, 30 years, then why would you be selling shares? Why would you not take that opportunity to continue to add to quality companies? Now, quality companies, that's the next topic. You shouldn't be dollar cost averaging into AMC, into GameStop, into stocks like Peloton, into stocks, that are questionable, high multiple stocks that really aren't making any money. Focus on the good stuff, guys. Focus on SPY, an ETF that tracks the overall S&P market. The QQQ, an ETF that tracks the NASDAQ market. Stocks like Apple, stocks like Microsoft. Apple has a ton of cash on their balance sheet. That company is not going anywhere. Of course, things can happen in the future, guys, that I am unaware of. Very catastrophic events for the world in general. So, don't take this video to the grave. But I do believe that Apple is a company that will be around in 10, 20, 30 years. Why would you sell shares of Apple right now? Yes, the stock is going down. You just accumulated a nice chunk of Apple shares that you worked hard on, that you put your hard-earned money into, and you're getting an opportunity to purchase more. Focusing on quality companies, adding an amount that you're willing to lose, and having a true long-term horizon, there is nothing to worry about right now. That is my opinion. This is not financial advice, but I think people out there will understand what I am trying to say, that if you are in your young years, 20s and 30s, which are most of the people that watch my YouTube videos, then you should focus on the long term and you should set yourself and make sure that you do not go different directions with a long-term portfolio. Don't start putting more money than you can afford. Don't start putting large positions on. Focus on it and be consistent and invest on a consistent basis and dollar cost average. A famous quote, I'm not sure who said it, maybe Warren Buffett, don't quote check me on this. Timing the market is never right. It's more about having time in the market, right? You do not want to time the market. You want to have time in the market. What does that mean? You're not trying to buy and sell and trying to time where the highs and the lows are. You are just hoping to be invested for a long period of time. You want to have time in the market. Now, I'm sure some of those bears out there are going to laugh at this video, but I believe this is true and honest advice for anyone that wants to invest for an actual long-term time horizon. Not someone that's worried about flipping a profit over the next year or two. Someone that wants to set up a solid long-term for their, late years of their life that they can either retire off of, take portfolio loans off of, set themselves up for a great time in your later years. Now, with all that said, I quickly want to do a recap of what I'm trying to say if I got lost or if you got lost along the way. And then I'll also show you guys my M1 account, which is a great long-term portfolio for anyone out there that wants to invest on a consistent time basis, and it does it automatically, so you don't even need to think about it. You take your emotions out of it. I'll go ahead and put a link to M1 down below if you guys are interested in using it. Not a sponsorship, just a service that I really love and that I use myself. So, to recap this video, are you investing or are you trading? Are you trading with your long-term portfolio? Are you worried about unrealized losses? Are you panicking about what you're seeing on your portfolio? If you are trading. You are over-leveraging, you are trading, and you are not investing for the long term. People trick themselves into thinking that they are investing for the long term. You need to ask yourself that question, and you need to be honest with yourself. Long-term investing, dollar cost averaging, investing money you're willing to lose into quality companies, not speculative names, with a long-term time horizon. And when I say long-term, I'm thinking 15 to 30 years, around that range. So guys, I hope you understand what I'm trying to say here. I hope this calms your nerves a little bit and gives you an idea of what has worked for the last how many years. People like Warren Buffett, older investors that are sitting on tons and tons of money, even people that you may know around your town, or your father or your grandfather, or someone that in your area that is sitting on a 5, 10, 15, $30 million portfolio, do you think that they were timing the market, or do you think that they were just buying shares consistently in their young years, waiting for that long-term time horizon? So with that said, let's go ahead and jump into the computer. I'll show you guys my M1 account, and it's bloody. I'll be honest with you. I started buying shares back in maybe October, and obviously I'm down quite a bit on these shares. Do I care? Am I concerned? Not at all. 0% concerned. I continue to buy this market every single week, dollar cost averaging, so that in the future, I can look at this portfolio and I can smile and say that I stayed consistent, I stayed on track, I stayed structured, and I am now reaping the benefits for doing so. All right, guys, so on your screen, you're looking at my long-term portfolio in M1 Finance. Now, what M1 Finance does, which is different than most investment accounts, is it automatically invests your money. You put a direct deposit into this every single week, automatically pulls it from your savings or checking account, and it automatically invests into the stocks that you choose, and it targets a percent weight that you choose as well. So here it is, guys. I'm down about $1,500 on this long-term portfolio, down about 30%. That's a pretty massive percent, right? Down pretty nicely. Have about $8,300 in it. At the peak, I had about $9,000 in this portfolio. You can see these consistent jumps are me putting money into this account, and you can see I have been doing that as well. But of course, the downside in the market is causing that value over time to start averaging out, to start going sideways, because I put $500 in and then I lose a good amount of it because the stocks move lower. Now, as you can see, the portfolio, even though that the market has been going straight down and a lot of the stocks that I own are going straight down, the value over time in this portfolio is sideways. Why is that? It's because I'm funding this account. And I'm funding this account with an amount I am willing to lose. I am okay losing the money that is in this portfolio. I know, losing $8,300 is not fun. I don't think I'm going to lose the full value of this portfolio. I don't believe the stocks that I've picked are going to go to zero in the long term. 20, 30 years, I do not see these stocks going to zero. And if they do, there's a lot more to worry about, right? But I don't think that is happening. So I put $500 a week in this account. It does it automatically. It purchases it automatically. I don't care what it does. I'm not even looking at this portfolio. I think I look at this about once a week just to see what, it's fun to look at. It's cool. The dashboard is cool. Do I make changes? Absolutely not. Here it is, down $1,500, 30% for the all-time of this account. You can see the cash balance is at $350. So on Monday, it's going to buy more shares. That will also go up when my direct deposit hits the account. So here's the stocks that I own, guys. Microsoft, Apple, AbbVie, great dividend. Home Depot, Tesla, Nvidia, Caterpillar, AMD, Lulu, Roblox, Netflix, and Coinbase. Now, what you can see are the weights on the right side. I am overweight in stocks that I am extremely confident in. Microsoft, not going anywhere. Apple, not going anywhere. AbbVie, fantastic healthcare name, not going anywhere, especially with the dividend they give. Home Depot, Tesla, Nvidia, don't believe those stocks are going anywhere. Yes, they may move lower, but I don't think they go out of business in the next 10, 20, 30 years. Now, I do have some speculative names, not speculative like AMC and GameStop, but a little bit more questionable. And that is why I have a lower weight on those positions. Lululemon, Roblox, Netflix, and Coinbase. Don't love them all, not that comfortable in them, but I have a very low weight on these and I am okay with the risk that I am taking here. I'm accepting the risk. That is something that you need to ask yourself. Are you accepting the risk that you are putting into a portfolio? If I, at any situation in the future, feel like I am putting too much, or if if my life dramatically changes and I need to lower my investments, if I need to, make a judgment call, then I can always lower the amount that I put in this portfolio. But at this current moment, I am accepting of my risk and I am okay doing what I have here in the long term. So this is a true long-term portfolio to me. I have another account that I buy solely for things. That is a larger account than this. I buy the SPY, I buy the QQQ, I buy the VNQ, and I buy the VYM. Those are all 4 ETFs that track the market, they track real estate, and it's a high-yield dividend ETF. That's all I buy in that portfolio, and I just continue to buy it, and I continue to do it every single week because I am confident that those ETFs will move higher over the long-term time horizon. Those ETFs, they just track the market. So this is what I'm talking about, guys. Investing an amount that you are okay to lose. Long-term investing, a true long-term portfolio. I am not trading in this account. I do not care if I am down 21% on Microsoft, 9% on Apple, let's say 26% on Home Depot. Very large percentage point losses, but an amount that I am okay with, that I am accepting of the risk. So guys, ask yourself after watching this video, are you in a situation that you are not comfortable in? Is that because you are trading and you're worried about unrealized losses? Is that because you are putting too much money into long term? If you are, then maybe it's time to reassess what you are currently doing. If you are someone that is in their young years, that is okay with what they're doing, that's comfortable with the shares that they have and comfortable with the risk that they are putting into, making sure there are cash is available. You never want to invest 100% of what you own, guys. I have a good amount that I save for a rainy day in cash, making sure that I am always aware and always ready to jump on an opportunity with liquid cash that I have in my savings account. Position yourself correctly, guys. And right now, the market is giving you a very large reality check of why risk management is so key. Investing money that you are actually accepting the risk on. Accept the risk, focus on managing it, focus on actually managing a portfolio, and I promise in the 10, 20, 30-year time horizon, you will be okay. If you enjoyed this little video, the talking, the sort of psychology about what I'm doing here, press the like button, subscribe to the channel. Make sure to come to the pre-market live streams every single morning starting at 8 a.m. Monday through Friday. Thank you guys so much. Help me get to 40,000 subscribers, and I hope to see you in the next video. Peace.